And that's all part of the evolution of learning how to trade. Is you gotta try everything out, see what you like the best, what you're most comfy with, and then stick with that if it works for you.
The FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show. Good morning, everyone. It's Friday, March the 21st, 2025, and you're listening to Forex Morning Mayhem. It's time for the daily market briefing. In today's headlines, European stock markets are under pressure, with airline stocks struggling due to Heathrow's closure, while US futures also show declines. The US dollar is strengthening against other currencies amid limited macroeconomic news ahead of a meeting between Trump and Hegseth at 1500 GMT. Bonds are mixed, with gilts underperforming due to unfavorable developments for reefs, while bunds are seeing increased demand. Energy markets are reacting to damage at Sudja, causing volatility in TTF gas prices, and base metals are weakened by the broader risk-off sentiment. Key upcoming events include Canadian retail sales data, Eurozone consumer confidence figures, policy announcements from the Central Bank of Russia, a credit review of France by DBRS, and Quad Witching Day in markets. Additionally, notable speakers such as Fed officials Williams and Waller are expected to provide insights later today. Stay tuned for a currency market update with Bill and Dave up next. Thanks for listening to Forex Morning Mayhem. Don't forget to subscribe and leave us a review if you like the show.
Let's start with the currencies. Aussie New Zealand dollar is in a downtrend. We are in the zone, so we are just waiting for a short sweet spot to set up there. Aussie US dollar, nothing going on. We're going to skip that. Euro CAD, hyperextended, skip that. Pound CAD, hyperextended, skip that. New Zealand US dollar, uptrend in the zone, waiting for a long sweet spot to form there. Singapore dollar, chief, nothing going on. US CAD, uptrend in the zone, waiting for a sweet spot to form. US Swiss Franc, nothing going on. That would explain why there's nothing going on. All right, Dave.
All right, folks.
On to the Back to Basics series. Anyway, so today we're going to talk about the MACD, the Moving Average Convergence Divergence. Are you familiar with that?
Yes.
Lots of people use this. This is a very popular indicator. The basic part of it is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. What is an exponential moving average, you may ask? It's just like a regular moving average, except in the calculation, there is a weighted effect added to the most recent values. So the most current prices that have happened have a more dramatic effect on the direction the line goes than the values from way back when. Okay? Does that make sense? So The signal line, let me get my handy-dandy tool up here. This signal line here consists of a 9-period EMA, which is, I believe, is the blue line, and the 26-period EMA, which I just discussed. So the signal line is when this crosses 0. So that's there. Okay, so if you look up from here, every time it crosses 0, here's 1. Okay, so there you would go long, there you would go short, there-ish you would go long,
Yep.
and there-ish you would go short, etc. Now, the last part of it is the histogram, and that is the difference between the value of the blue line and the red line. So that's the difference between the value of the blue line and the red line. That's how you calculate the histogram. Have you played with this at all?
I have a lot of these charts, I'll tell you. A newbie standpoint, they just look like the chart right above.
Yeah, they do.
I can just read the chart above and try to guess where it's going, just like this one. When we first started looking at this and you started training me and everything else like that, I started looking at why are people using all these indicators?
Oh, it is confusing.
This is one of them. I literally MACD. I'm like, it looks exactly like my chart above. The only thing I'm looking at is that histogram and going, okay, is that going to tell a bit how the strength of the signal is?
Yeah, a little bit. If you just followed where the histogram goes up and down, let's see here. So right there, if you went long there, that would have been a pretty decent trade. Same here. Go short. That one would have traded against you a little bit.
Yeah, just
All these things are so subjective. I suppose people successfully use them to make money, but I have found them more as a subjective indicator than a black and white tool. I guess that's the way you kind of look at it, right?
yeah, mine is all support. I look at things and say, okay, we're going long here. And then I can look for is anything against me? Why is it against me?
Yeah, that's probably cool. And that's all part of the evolution of learning how to trade. Is you gotta try everything out, see what you like the best, what you're most comfy with, and then stick with that if it works for you. And that's pretty much the name of the game.
Yeah.
Okay, Chief. That is
Interesting. All right.
all I have for today. All right.
Happy trading.